It's about that time of day again, folks. 7:30 a.m. Eastern Time, Monday through Friday. Welcome back to our crude oil morning prep. We're going from the trading floor, we're going from the screen here in Los Angeles, all the way to the trading floor on the NYMEX exchange in New York City. My name is Joseph James. I run a live trade room every morning at 8 a.m. Eastern Time with students from around the world. Come out and see me every morning at SchoolOfTrade.com. I'm here with my good friend, colleague, and partner in crime, Marty Errico. Marty and his partner Jeffrey, they do a great job directly from the NYMEX exchange every morning from Traders Audio. So go out and check them out at 8:50 a.m. Eastern Time, Monday through Friday. It's a Monday morning here, guys. I want to welcome you guys aboard today. Hope you had a great summertime weekend. Remember, you only get a few of those summertime weekends, so we always like to encourage you to take full advantage of them. Hopefully you had a great weekend. Welcome back. Once again, my name is Joe. Call me JJ. Call me Joseph. I'm a technical analyst. This morning, I'll be providing you with a top-down approach, which means I'm going to be starting with a slower time frame first, moving down to a faster time frame. And in doing that, I'm going to try to identify what's happened over the past few weeks, what's happened over the past few days, the past few hours, and eventually we're going to get to a chart that's going to show us what's happened over the past few minutes. So we're going to analyze top-down, which means slower time frames, last few weeks, days, hours, and of course, specifically, we're trading the U.S. morning session, right, for crude oil and natural gas futures. So we'll be focused on the session that was prior to that, which is the London trading session. My job is quite simple. If I can anticipate direction at the open, I'm going to use the clues that we got from overnight and we got from the last few weeks. If I can find direction at the open, I can look for high percentage trading opportunities starting at 8 a.m. Eastern Time. So right around 8 o'clock Eastern Time, about 25 minutes from now, we'll be looking for our first few trades of the week. Should be an exciting week in front of us, and we're going to give you guys some high percentage opportunities to look for. Now, once I'm done with you, I'm always excited to hear what Marty's hearing in the pit, because Marty's got his finger on the pulse of this market. He's always able to find us a couple more important levels every morning. And remember, Marty, our resident pit analyst here this morning, has his feet on the ground on the NYMEX exchange. They do a great job each morning. And today, we'll be looking at market direction, intermarket divergence, meaning the divergence between crude oil, RBOB gasoline, heating oil, and Brent crude. Very important, those intermarket divergence clues. We're looking at market internals, option prices, and those always important and sometimes confusing or elusive, those pit session trading levels, right? Always important we remember that on the screens, we don't see everything like Marty sees on the floor. And those pit session trading levels will be of the utmost importance for us today. All righty. Now that you know the plan this morning, let's jump right over and get started. First thing to do is, it's a Monday morning. Let's lay out the plan for today. The plan for today, I'm going to check my economic news calendar. Now, I want to direct you first at sidewaysmarkets.com. Okay, our day trading blog is a link right here called Crude Oil Squawk and Prep. Take that page. That brings you on over to our Crude Oil Prep blog. Now, all the charts, all of the information that we need today is listed right here on this page. So you can always go here each morning and grab a copy of all the charts. Okay, there'll also be a video up here each afternoon. Well, actually, after about 9 a.m. Eastern Time, we have a video up here for you. Looking at the news worksheet here first, we go in, and the first thing I'm going to do is let's put together a roadmap. Let's put together a roadmap. The roadmap I'm looking for here now, I'm looking at what is the day of the week, what is the week of the month, what is the month of the year. Okay, so first of all, what is the day of the week? Today's a Monday. What is the week of the month? Well, it's pretty much the first full week of the month. And of course, we know that the month is the month of August, which is a summertime month. All right, guys, quiz time. What do we know about a summertime Monday? Because that's what it's telling me. What can we possibly assume might be the case on a summertime Monday? Well, I personally was traveling on Sunday evening, coming back from my grandparents' house, right? Summertime. We took a trip to go see them this weekend. I can imagine many of you might have spent time at the beach or the lake or doing something similar. Summertime, we're always looking for excuses to get outside and enjoy the weather, enjoy the sunshine, right? Travel a little bit. Okay, so think about yourself, think about what you are doing over the weekend, and think about, well, it just might be a little bit difficult for you to come into the office this morning, huh? It might just be a little bit sluggish as we get started on a Monday morning in the summertime. And that's exactly what we'll assume is going to happen today. When I think Mondays, I think, oh man, is the weekend over already? That's the first thing I think about. And I'm sure many people do the same thing. So that's the reason why Mondays, we can expect things to start a little bit slowly. So take your time on a Monday morning. Don't feel rushed to get into that first position, especially with the emotions. If you're anything like me, Monday mornings can sometimes be a little bit anxious, right? You're anxious to get started. So take it slowly this morning on a summertime Monday. It's the first full week of the month, so we don't really need to worry too much about anything. This is the first full week, but it will be the second Friday of the month. Next week will be OPEX week. So we're not worried about the week of the month. We are concerned, though, about the month of the year. The month of August is notorious for being one of the lower volume months of the year. Did you know that in Europe there is actually a holiday? The month of August is considered a holiday. In many cultures in Europe, many traders, businesses take the entire month off completely. So remember that information when it comes to trading. We're going to kind of set the stage here first. What day of the week? What week of the month? What month of the year? And what does that tell us we should expect today? Now that we know that information, now we begin to plan around the news. We see we have 10 o'clock news this morning. That's the only major news that we have. This is the ISM non-manufacturing index. It's not going to be that important for crude oil and natural gas. However, we know better than just to ignore it now. We must be aware that there's news at 10 o'clock this morning. That 10 o'clock, this 10 a.m. news is going to be a market mover. It won't be a red star news, right, like we see tomorrow with international trade or jobless claims on Thursday. You'll notice it's not tagged as a red star news day. So we're not going to expect that huge volatility. But I think you're going to see right away here, though, when I start going through some charts, we've got some clues here for some pretty good ranges today. So just be aware, 10 o'clock news, which means I'm going to set my alarm for 9:45. At 9:45 a.m. Eastern Time, I'll be reminded of this news event, and I'll sit on my hands until 10:05, right? Then we'll get back in the marketplace looking for trades again, all righty? So you've got the plan. Summertime Monday. Be careful getting started too quickly this morning. Be patient this morning. 10 o'clock news. We now know when the meat and potatoes will be coming out today. Remember, the news prompts traders to react. The news gets people participating. So look for the best opportunities around that 10 o'clock hour this morning. Moving forward, now that we know what to expect in the news counter this morning, now let's get into some charts. First thing I'll jump into is my anchor chart for crude oil. My anchor chart for crude, very simple. It gives me all the biggest, most important price levels. As we can see, the anchor chart shows me very simply support levels below me, resistance levels above me, and an overall market direction. The anchor chart tells me two things. One, market direction. Two, major support and resistance. Let's check off number one. What's the market direction? Market direction is bearish. Pretty simple there, right? I don't need any advanced degree to know that one. No microscopes needed. What about number two? What about major support and resistance? Well, this is pretty simple. I've got a support level above me. I've got a support level below me. Or resistance level above me, support level below me, excuse me. Above me, I've got resistance. What do we have? Well, as I go higher, I have our cloud. I have our trend lines. We've got 107.69. Those are very simply put the most important levels of resistance. Looking below us, what do we have as support? 105.75, 105.02. Got a trend line hanging out down here. We have a small cluster around this 104.10, but I think that 104 even big round number, 103.99, will be a decent enough level there for you to use as support. So we now know where the major support and major resistance levels are on this chart. What will they be used for? They will be used for major turning points. What could I possibly use major turning points for? Profit targets and locations to look for trades. So we know that around each of these support and resistance levels this morning, we should expect to see the best opportunities today. That sounds like us having a big bullseye on a roadmap, right? This is like having a treasure map and having a big X to mark the spot. Now the anchor chart tells us exactly where X marks the spot. It tells us exactly where we're going to get either a great profit target or a great location for a price reversal and a possible continuation of, right, the current trend. So we know that if price was to move higher this morning, that would be lower percentage trading long. But if I was to wait for price to bounce off this trend line and then go lower, now I'm trading with the long-term trend. See where I'm going with this? And that will become higher percentage. So lower percentage going up, we trade with the long-term trend, higher percentage coming down. And remember, as traders, we're always looking for those higher percentage opportunities. Now that we know the overall direction and now that we know the major support and major resistance, I can move a little bit faster now. Let's move from this anchor chart over to a 5-minute chart. And this 5-minute chart shows us quite a bit of information. And this, of course, was referenced today on the blog we were talking about earlier. What do we see on this chart, ladies and gents? Well, first of all, I can see 3 clues. We can see the lower, right, the lower price action. I think that's an easy one, right? We can see the price action has been moving lower. We can see lower lows, lower highs. Again, half the battle is just finding direction. If I can pick direction the right way, I can ignore the other direction. I can focus only on one side, and I can basically cherry pick for the best market personality and the best entry patterns. Now, I can't be married, right? I can't ignore the other side per se. I know that's what I said, but we have to be aware that at some point, if the direction changes, we need to make an educated decision to change with it. Right now, though, we can see that direction is moving lower. If we were to break this trend line overhead and start to go higher here, then I would say, okay, the direction is no longer to the downside, and we do want to start looking for longs now. So the first thing we see is the direction is pointing lower. Second thing we see here, which is quite a big clue, this is the location of the lows from Friday and the lows from Thursday. Now, I personally am a big believer in trading ranges. I believe they are more important than Fibonacci levels, market profile levels, moving averages. And I say that because of the psychological aspects of trading ranges. For example, I know that we are below Friday's low of day at 106.45. You can see on Sunday afternoon they did break below it, but ended up going back higher again. Where I'm getting at with this, though, is that if we know that Friday's low at 106.45 has been broken, that tells us that for whatever reason, and we really don't care why, for whatever reason, there are lower prices on the tape. And that means with lower prices, that means sellers have a reason for those lower prices. That means buyers are accepting of those lower prices, which tells us a story. It tells us a very valuable story here. When prices are below the low of day from yesterday, we have no choice but to assume the market personality, the participants in the market have seen value being lower for whatever reason. In this case, we're talking about crude oil. Maybe there's more supply, right? Maybe the cold weather in the wintertime, right, wasn't as cold as they were expecting. Whatever the reason may be. Maybe it's a political statement. Maybe news came out, right? It doesn't matter. All we care about is where are we? We don't care why we're there. 106.45, I'm below it, I'm bearish, right? It's the rule. Price action is below the lows. There's no other way to think about it. The sellers have determined there's value lower. Well, then we start putting on our human being hat. We think like humans, and human beings are creatures of habit. I was just out to lunch this weekend with my grandfather, and my grandfather says to me, Joe, you ever notice you get the same thing on the menu every time you come to this restaurant? I do the same thing. And I said, well, Papa, of course, human beings are creatures of habit. I get the same iceberg salad because, well, I know it tastes pretty good. I know I've been there before. I know I'm going to like it again. I would rather not risk it on the BLT. All right? I would rather not risk my lunch on something I'm not familiar with. You see where I'm going with this? Right? I'm talking about a ham sandwich. Right? I understand that. but it's human nature to go back to the coffee shop and order the same cup of coffee. It's human nature for us to want to gravitate towards things that we've already been through before. Couldn't you see traders coming in this morning and say, "Hey Jim, make sure you buy all you can get at 105.32. Remember we were there last Thursday? Yeah, that worked out great when we sold below 105.32 last Tuesday. Let's do it again today." You get the point. Human beings are creatures of habit, which means now that we're below 106.45, can't we just assume that those traders are going to try to get it down to that 105.32? Absolutely they are. So we can expect prices to move lower. And certainly if we get below that previous low of day now from Thursday, right, every trader who is participating below 105.32, right, there's that ham sandwich idea again. They're going to come back in and they're going to get involved again. So we know that below the low of day from any range, right, recency being more important, of course, last Friday's range, we're below. If we get back below 105.32, last Thursday's lows, now again, the sellers are screaming at us. They see lower prices. They see value in lower prices today. So as we speak right now, I am looking for opportunities to sell short. We know we need to be patient this morning, waiting for the best opportunities, and that's because it's a summertime Monday. We know that we've gone below Friday's range. We know that we're on our way down to Thursday's range at 105.32. And here now we have an entry time frame. This is one of the faster time frames we'll look at here this morning on my computer. And of course, I can see some lower lows. Now, the only thing we need this chart to do is to give us that final bit of confidence. Lower lows, lower highs, good market personality. That's all we need. I'll be looking for trade setups here now as we go lower, and it's all we need here to put together our plan of attack. So we have gone from looking at the economic news this morning all the way down to looking at a very fine-tuned tick chart, knowing that we have new lower lows and we are ready to get selling short. I have a target at 105.32. I have a job of looking for clues, though, once I get down to that 105.32. Remember, we talked about that earlier. Once I get down to that 105.32, down to that low of day from Thursday, I may see price bounce and go higher. If that's the case, short-term buying opportunities. I may see price blow right through it. And if it goes right through that low of day from Thursday, I'll be selling short right along with you guys. Guys, don't forget to come out and see me every day in our live trade room at School of Trade. We call our trades live in real time every morning. But you know what? Before we head over there, though, I want to hear what Marty Errico has to say here. You know, he's been waiting there patiently here all morning. They got him locked out of the exchange. He's there so early. He's trying to break into the exchange. He's there so darn early this morning for you guys. Marty, how are you this morning? Thanks for being here on a Monday morning. What are you seeing here on a Monday morning in the summertime?
Well, I'm about to paint you guys a picture in just a second. But yeah, speaking about, nature, human habit, right? It's just one thing. I got to walk in through the same door every morning. I flash my badge to the same guard every day. I got to go to my same little booth every single day and make sure I look at my same routine, okay? And there are traders that are like that. So right now, the picture that I'm going to paint you guys, our locals are pretty much long right now. We have a lot of guys that have their bets are placed and they're looking to go long. So they did this on Thursday. They didn't even come in on Friday, right? Half of them didn't even come in on Friday, so they're still net long. They're holding in these long positions. Oh, let me get the screen. I'm sorry. So they're holding these long positions in, and they're kind of staying put, right? They leave on Friday. Now they're in today. Well, they'll probably be in today, and they're probably hurting a little bit. I mean, we're down to 106. So I'm thinking we can probably go a little bit lower, and then we'll be looking to buy some support here. JJ had some good levels there. I don't think we could make it all the way down to 104. I mean, some near-term support levels. That Thursday low I liked. I liked that 105.33 level. Again, but right now we're pretty much fiddling in the middle. We're, as JJ would say, I mean, we're sitting right in the middle right now of really that wedge. I have a longer-term bullish channel on the 240-minute chart. I mean, if I have it ready, I can flash it to you, but I'm kind of working with, so we do have now us basically in the middle of our channel. Again, here it is, right, in the middle of the channel. So, I mean, I'm not really interested until we can at least breach a level, and we can buy that level. So we can sell on the way down. It's a little higher risk, but yes, I am looking to buy the lows. Okay, 105.33, 105 even, basically the lower end of that channel that I just flashed to you guys. All right, let's get to basically our usual suspects that we like to look at each morning. Right now we have the crude down just a bit, trading at about near the 106 even. I got Brent holding levels around 108, around 108. We're 107.95 right now. We're down about $1. Brent WTI spread's looking bullish this morning. I got 190 on the spread. It's in contango by 10 points. So overall, we're going to be looking for that kind of buy the type of dip mentality here. Again, I'm looking for buying the dips here because that spread is still tight and locals are still long. They peg the 110 level. They want to see 110, 114. That's what they're pricing the options. I'm here. I personally think we can trade down to 105.33 and buy those lows. But the bigger locals in the pit, they're looking for 114 basically right now. 110 and 114. That's what the bigger guys are bet on right now to the upside. Personally, I think that we can maybe make a test of 109.10 and see what happens at 109.10. I wouldn't go put in those large bets to the upside yet. They're a little riskier, and they're hedged in every direction too. You have to realize. Looking over at the Brent and the heating oil again. The RBOB and the heating oil. RBOB is our leading indication today on the crude, so we're going to be watching RBOB vol sitting steady and firm right now. Right now you have your RBOB curling lower right now, but again, coming onto support, we're going to be looking to buy that support later on in the morning. Same thing for the heating oil and the Brent crude. So overall, again, we're looking to sell down and buy these lows as we're in the middle of our wedge. We can't make a high percentage trade in the middle of the wedge, right, or a channel, or whatever scenario we want to put it into. Kind of the same thing we were talking about last night a little bit. One thing to notice, volatility still holding very firm. That's very bullish still. Volatility was 21% last night. Now I'm looking at about 23 to 24% implied volatility, so that's rather bullish as well. So we're kind of looking at a little bit of a pullback, right? Trade down to some support and buy those support levels is what we're looking at. So again, we will trade a little lower, I'm thinking, this morning, and then we'll kind of pop throughout the day. We'll get to levels in just a second. I just want to talk about natural gas real quickly as we're in a very exciting spot for natural gas. And if you are a natural gas trader, then you know what I'm talking about here. We are pretty much on the larger time frame, about to make a little ride down towards the lows, right? Longer time frame, you can see here that we are pretty much coming down towards the lower end of our channel. We want to buy the 330 and the 325. I love to buy the 325s, but we might only get down to 330. So we are going to go lower in the near term, right, in natural gas. But longer term, I'm very bullish here. So I'm thinking that we buy the low of that channel that I was just showing you guys here, right? We buy that 330, that 325, and then we'll zoom in and look at the levels right now. So what I have for you here is going to be that 330 even, 328, 325, and 318. We're going to be looking to buy all those support levels. So you can sell down to there. It's higher risk, but buying the low would be the higher percentage trade, as I really think that's going to be a really good setup. So stick with your guns on that one. Perfect. And we're going to try to buy the lows on that trade. Again, volatility right now is looking perfect for the trade, and all of our variables for that setup are looking good. The spreads are very wide this morning. Of course, we are going to trade lower than higher. So again, it's a nice buy for natural gas if you're into it. If you're not into it, it doesn't bother me. Let's look at some levels now, guys. Today, we have pit session levels from Friday. So we're going to be looking back at levels from Friday here, and I'm going to give you guys some support and resistance levels. Now, speaking of human nature as well, these guys, they take these numbers, they write them down on the back of their cards, and they buy and sell at these levels. I remember I had a friend of mine, I was on the phone with this on Thursday, and he was talking to me, and he's like, how can I trade conservatively? And I was like, you can trade like my friend Dan. I don't know if Dan's listening today. And you could buy and sell the pivot points. And it's a rather conservative strategy. So I don't mean to joke or insult, but I'm only kidding, guys. I am who I was talking to on the phone. But that's what they do here. They write down the numbers, they buy and sell the numbers. So I'm serious. I used to do it. So all right, let's take a look at the levels here. We have the high from Friday, 107.41. The low from Friday, 106.45. Closing settlement number, 106.90. Right now we're trading at 106 even, so we're about 90 cents off of the Friday settlement at a pit session. Daily pivot today, 106.92, right near the settlement number, which we are well below at the moment by about 90 cents. We trade 106 even right now. Support, we blew through our first support level of the 104.43 already. 106.43, 106.43 we already blew through. We have the 105.92 right here, so this will tell all. If we can hold this, then maybe we can go higher. If not, then we'll go see the 105 even or the 105.33. I'll actually include that here I'll actually include, how about that, 105.33, because I think that might be the buy of the day. If not, 104.90 might be the buy of the day. Resistance up above, ladies and gentlemen, I got that 107.39. I got 107.92. I got 108.92. I got 109.10. And I got 110.23. That 109.10, I'm not going to put it in there, but just remember I was screaming about it last night on the Sunday night call. If you guys were there. Volatility still holds 21%. VIX index 2230, right? We have a lot of options area, but really the most, I should erase all these, not even confuse you guys. I should just say 110 was the most traded strike last week. 110. 110 was the most traded strike last week. Simple as that. Over, I think, 5,000, or no, over 50,000 times, I'm sorry, was traded in the pit. So that's big, guys, in the options pit. So they just put a lot of money up in 110. They don't really sharp the downside too much. They fiddle around with the 102 put. They fiddle around with the 100 strike, but nowhere near as many times that 110 call. So that's what they're doing in the crude pit right now. Again, volatility 21%. Open interest 328,463. Tad lower from Friday's open interest, but you have to realize now after the first of the month we're starting to get a little bit of open interest now into the OC contract. That's the October contract, OC. So we're starting to see SEP-OC spreads kind of come in play, so we can start to use that as a correlation key for us. When the spread tightens, we buy. When it widens out, we sell. So now a little money's going into the OC. We had big buyers in the OC last week. We had the jet fuel buying and the cruise liner buying last week, along with local buying as well. So we can make another test of it, guys. I'm just letting you guys know what happened down there on last week. Let's look over at the SEP natural gas. SEP right now, front month, of course. Talking high from Friday, 340.10, low 334.10, closing settlement number 334.10 as well. We closed right on the low print of Friday, guys. Closed and settled right on the low. And no, that's not a mistake. I'm serious. We did close right on the low on Friday for the natty gas. Daily pivot is going to be 336.30. Resistance up above at 338.50. 341.30 and 347.30. Support down below, I got 332.5, 330.30, and 324.30. So overall, again, I'm looking to buy the lows on the natural gas. I'm looking to buy that 330 even, the 325, if not then 318. But I'm looking to buy those 330s, 325s in the natty gas. In the natural gas pit, not a lot goes on in there, to be honest with you guys. I don't want to mislead anybody. Nothing really happens in the natural gas pit anymore. They trade that electronically. In the options pit, they still trade a few thousand contracts, but it's nothing substantial that can lead us in any type of really good direction like the crude and RBOB and heating oil pit does. So that's really it, guys. Again, it's 8 o'clock on the dot. Enjoy yourselves today. Be careful. We're in the middle of the range. Got to give back over to JJ. I'll be on the trading floor very shortly, and we'll start this thing up at 8:50. Monday morning, baby. Get up. All right, JJ, take it over.
Thank you, Marty. Appreciate it. As always, great hearing from you each morning. Happy Monday right back to you, my man. Guys and gals, I want to thank you all for tuning in today. It's always a great morning here each morning, 7:30 a.m. We get the day started each day. I hope you guys found value in our presentation this morning. Sounds like Marty and I are in agreement and also in disagreement a little bit. So I'm recommending we're selling short down to that 105.32, and Marty's saying he's looking to buy that 105.32. So I love it. It sounds we got a great plan of attack here in the short term and in the long term. Don't forget to go out and see Marty and his partner Jeffrey over at Traders Audio this morning, and come out and see me every day of the week here at SchoolOfTrade.com. Drop us an email. Share with us your feedback. We would love to know what you love, what you hate, what would you like to see added, what would you like to see less of or more of each morning, right? Maybe you want to see more of those ham sandwiches each morning. Guys, thank you so much for being here. The entire team at Traders Audio, the entire team at School of Trade, we thank you guys for tuning in every morning. Send us your feedback, and we'll see you guys here 23 hours and 30 minutes from now for a Tuesday edition. We'll see you guys tomorrow. Remember to learn it so you can earn it. Catch you guys here tomorrow. Adios, amigos. Bye-bye for now.